Hi professionals, welcome to Tax Guru YouTube channel. This is CA Rohan Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Today we are going to discuss case laws reported to High Court under GST. This is a part 2 of video series What Law Says. Indirect tax part 2, that is GST. So let me allow to share my screen. It's first case law. Madhesh at Madison versus State Tax Officer, Madras, date of order 21st December 2024, relevant section 129 of CGST Act 2017. Let's understand facts and issue of the case. The goods were detained. Notice under section 129 subsection 3 of that was issued on the date of detention itself. However, no order of detention made in form GST MOV 09 till date of filing rate. What has happened was that no order of detention made in form GST MOV 9 till the date of filing rate. Violation of timeline stipulated under section 129 subsection 3. Issue was whether the proceedings under section 129 subsection 3 can be stipulated in the absence of complying with the timeline mandated under section 129 subsection 3. What was issue? Issue was whether the proceedings under section 129 subsection 3 can be stipulated in the absence of complying with the timeline mandated under section 129 subsection 3. Let's see what Madras High Court observed. And under section 129 subsection 3, the order ought to have been passed. The order ought to have been passed within a period of 7 days from the date of service of such notice. The impugned proceedings are beyond the timeline stipulated under section 129 subsection 3 of the Act. Consequently, show cause notice is liable to set aside and detention of goods based on such time bad order is illegal. Next case. KEA Industries Limited versus State of UP, Allahabad, date of order 4th February 2025, relevant section, again section 129 of CGST Act 2017. Let's understand facts and issue of the case. An order directing a seizure of the vehicle and the goods, seizure of the vehicle and the goods on the ground that the e-way bill was not present with the goods. Very important case law. Order directing a seizure of the vehicle and the goods on what ground? On ground that the e-way bill was not present with the goods. However, the department admitted in the court during the period under consideration the goods that were being transported by the petitioner were not covered by the requirements of the e-way bill. Means e-way bill was actually not required for that particular goods. It was admitted by the department. Aggrieved, petitioner filed an appeal to the Honorable High Court. Let's see what Allahabad High Court observed and held. Based on the admission of the department that during the period under consideration, goods which were being transported by SAC were not covered by the requirement of the e-way bill, the impugn order was bad and it's therefore liable to set aside. They could not be seized under section 129 for not being accompanied with an e-way bill. Next, Steel Authority of India Limited versus State of Jharkhand. Date of order 30th January 2025. Let's understand facts and issue of the case. Petitioner, a public sector undertaking, engaged in manufacture of various field products. Okay. Petitioner is a public sector undertaking and engaged in the manufacture of various field products. Under the VAT regime, company had unavailed ITC, which was transitional by it under GST regime in terms of section 140 subsection 1 of JGST Act, that is Jharkhand GST Act. Okay, what has been happened under the VAT regime, company had unavailed ITC, which was transitional by it under GST regime in terms of section 140 subsection 1 of JGST Act. Petitioner received show cause notice on ground that availed ITC was not entitled to avail in terms of section 18 subsection 8 clause 8 of JVAT Act, that is Jharkhand VAT Act, and accordingly the transition of said credit under the GST Act was impermissible. Okay, that is the main issue of the case. Petitioner received show cause notice on the ground is that availed ITC by the petitioner availed the ITC was not entitled to avail in terms of what section 18 subsection 8 clause 8 of the JVAT Act, and according the transition of said credit, and therefore the transition of the same uh, what we can say that they have the ground that credit was actually not right, and that credit by itself is not correct, and availment and transition of that said credit under the GST Act was also impermissible. Petitioner filed a detailed reply. Petitioner filed a detailed reply. However, order was passed denying the transitional credit in GST regime. Petitioner preferred an appeal before the appellate authority, but appellate authority rejected the appeal and confirmed adjudication order that it was against the petitioner, that is assessee. Aggrieved, petitioner filed appeal before Honorable High. Let's see what Jharkhand High Court observed and held. Eligibility of ITC under East While VAT Act to be adjudicated under provisions of repealed Act. Okay, it was the first thing that eligibility of ITC under East While VAT Act to be adjudicated under provision of repealed Act only and not under the GST. Proceeding for alleged inadmissible credit, under the GST Act is improper and without jurisdiction. And therefore, impugn adjudication order and appellate order both are quashed, means they cancelled against the assessee. Next case. Kesar Jewelers versus Additional Director General Madras, date of order 7 February 2025. Relevant sections are sections 70 and 83 of CGST Act 2070. Let's understand facts and issue of the case. The petitioner engaged in the trading of gold bullion and gold jewelry. Director General of Goods and Service Tax Intelligence DGGI issued a summons to the petitioner under section 70 of the CGST Act to be present at their office. Thereafter, the petitioner's place of business was also searched. Certain documents and papers were seized. Another search was carried out during which gold bars, along with computer, mobile phone, loose cash were seized and duly recorded in the Mahaja. Another summon issued. Upon the petitioner to appear for an inquiry. Thereafter, an arrest memo with grounds for arrest was issued. Petitioner was arrested and was granted bail too. Impugn order in form DRC 22 came to be issued, thereby attaching provisionally the petitioner's bank accounts. Petitioner submitted that impugned attachment proceeding is banned as it didn't disclose any tangible material leading to provisionally attach the property of the petitioner. The exercise of power under Section 83 of the Act is without jurisdiction. His main issue under this case was related to provisional attachment. Let's see what Madras High Court observed and held. Provisional attachment is an extreme measure. Provisional attachment is an extreme measure that must be based on tangible material and must be necessary to protect the revenue. Must be based on tangible material and must be necessary to protect the revenue. Attachment order in the present case was mechanical and failed to disclose any specific tangible material or justification for attachment. Okay. Attachment order in the present case was mechanical and failed to disclose any specific tangible material or justification for attachment. Since the pendency of proceeding under Chapter 12, 14, or 15 was not sufficient to justify provisional attachment and revenue didn't establish that revenue could not be protected without attachment. Therefore, the impugn order was to be set aside in the favor of assessor. Next, Kamla Stores and ANR versus the State of West Bengal and ORS, Calcutta, date of order 6th February 2025. Let's understand facts and issue of the case. Petitioner's appeal was rejected on the ground that the same is bad by limitation. The appeal got rejected on the ground that the authority is competent only to condone the delay provided the appeal is filed within the period of 1 month beyond the time prescribed. Let's see what Calcutta High Court observed and held. Petitioner had made the pre-deposit before filing the appeal. Petitioner had made the pre-deposit before filing the appeal. There appears to be a delay of 79 days in filing the appeal. Okay. Taking into consideration that they are a small partnership firm and there is a no lack of bona fide and one doesn't stand to gain by filing a belated appeal, the court directed the appellate authority to hear and dispose of the appeal on merit. Okay, his delay was condoned in the favor of assessee. Next, HS Steels versus Commissioner of State Tax 2024, Allahabad, date of order 15th October 2024, and relevant section is section 73 of CGST Act 2017. Let's understand facts and issue of the case. The petitioner's registration under the Act was cancelled. Subsequent to the same, no business was carried out by the petitioner. Means first, petitioner's registration under the Act was cancelled. Subsequent to the same, no business was carried out by the petitioner. It appears that a show cause notice was uploaded on the GST portal. But what happened was that show cause notice was uploaded on the GST portal. Order was passed under section 73 of that. What Allahabad High Court observed and held that once the registration has been cancelled, the petitioner is not obligated to check GST portal. Okay, once your registration has been cancelled, you are not obligated to check GST portal. The mode of service should be by way of alternative means of the petitioner. There has been violation of the principle of natural justice. Accordingly, the impugn order passed by the department is quashed, that is cancelled and set aside in favor of assessee. Very important case law is if your registration was cancelled, you are not obligated to check your GST portal. So whatever show cause notice or whatever notice deployed on the portal, you are not liable to check that and revert on that. Okay, and everything is passed on basis of that can be questioned and set aside, taking into the benefit of this case law. Very important. Next, Cable and Wireless Global India Private Limited versus Assistant Commissioner CGST 2024-23 Central Tax 161 Delhi. Date of order 26th September 2024. Let's understand facts and issue of the case. Petitioner have its branches in Mumbai and Delhi. It provided business support services to Vodafone Group Services Limited, VGSL, from its Delhi branch. Okay, business support services provided by Vodafone from its Delhi branch. Claimed a refund of unutilized ITC. Claimed a refund of unutilized ITC. The refund was denied on the ground that payment for export of services was routed to the petitioner's Bangalore branch account instead of Delhi branch. It was alleged by the department that conditions for export of services were not fulfilled as required under Section 2, subsection 6, clause 4 of the IGST Act. This was confirmed by Commissioner Appeals, and therefore aggrieved petitioner filed an appeal before Honorable High Court. Let's see what Delhi High Court observed and held. Export of services merely requires payment to be received by a supplier of service. Very important. Export of services merely what requires payment to be received by a supplier of service. Remittance received in different bank account doesn't affect the supplier's location. Remittance received in any account, any bank account, different bank account doesn't affect the supplier's location. Denial of refund would defeat the purpose of refund provision under GST law, and accordingly, orders rejecting the refund were set aside and matter was disposed of in favor of the petitioner. Next case. Metal Ore Corporation India Private Limited versus Union of India 2024 Central Tax 13 Delhi. Date of order 22nd October 2024 and relevant rule is Rule 28 of CGST rules. Let's understand facts and issue of the case. Petitioner has entered into employment agreements with the employees of its foreign parent entity. Petitioner has entered into employment agreements with the employees of its foreign parent entity. Employees were deployed with petitioner. Petitioner made payment to foreign entity but didn't raise any invoice for the service provided. Department issued show cause notice on account of non-payment of GST under RCM for import of service. Aggrieved petitioner preferred this writ petition. Let's see what Delhi High Court observed and held that. As per second proviso to Rule 28 of the CGST rules, where the recipient is eligible for full ITC, the value declared in the invoice shall be deemed to be the open market value of the service provided. Court further noted that CBIC circular number 210 4 2024 GST dated 26th June 2024 itself clarifies that where no invoice is raised by a domestic entity for services rendered by its foreign affiliate, the value of such services is deemed to be nil. Very important. Where no invoice is raised by a domestic entity for services rendered by its foreign affiliate, the value of such services is deemed to be nil, and consequently, show cause notice were fertile, and hence the writ petition was disposed of in favor of the petitioner. Thank you so much for patience hearing, and this is note. Please note my contact numbers. If you have any queries related to this, you can post me to my email ID. And hope you are growing, you are learning, you will be benefited by this video series. So let's have a subscribe this Tax Guru YouTube channel so that you can be updated for various updates on income tax, GSTs, companies law, and other things. So if you like this video, click on like, share with our professional networks, and connect it to the Tax Guru YouTube channel by subscribing it. Do remember that we will meet soon in next part, that is income tax and we will meeting week by week. So be with us. Hope this is service to you and goodbye.